better way to break all of this down than live from the SIBO trading floor, Mr. Prosper Trading Academy CEO, Scott Bauer. Scott, good news is now bad news for the markets?
That's what it seems like, right? I mean, we want a robust economy. We want less people filing unemployment claims. That's all a good thing. But as you just said, what that is doing is kind of putting doubt in what the Fed may do, not just over the next several meetings, October and December this year, but into 2026 as well. So if you go back to last week, Liz, when the Fed cut by a quarter, they made their announcement, we actually saw the 10-year, just for a brief moment, dip below 4%. Just for a brief moment. We're now at, what, 417, 418 or so. That is a significant move. If you think about that, one interest rate in the terms of bonds, it's 32 basis points. We've moved basically 18 or 19 basis points off of that bottom, more than 0.5% higher. So that is the concern in the marketplace right now.
Yeah, so rates going, some people believe in the wrong direction. They would like to see them come down. So when you are investing in this climate, which appears to be a strong economy, and let's also be clear that Federal Reserve Chair Jay Powell has been very clear that, at least in the past couple of weeks, that he's putting sort of the worries about price inflation to the back part of this picture and putting the job concerns to the front. How do you invest in a climate like that?
It is actually very tough because, again, what we're hoping for is news that is not great, and that's not an ideal situation here. So I think this is a market that overall is still in an upwards trend. I believe that this is a temporary setback. Can we go down another % or two? Maybe, probably. In fact, 6,500 on the S&Ps is probably that line in the sand that we have to look for, which would be down somewhere in that area. But this is still, for the most part, an upward trending marketplace. So you look for dips, you look for pullbacks, which a lot of these high flyers that we've seen recently, whether it's been the nuclear stocks or some of the quantum computing stocks, AI stocks, those have pulled back in a big way, almost as hard as they rallied, which, at some points that was kind of ridiculous the way these stocks rallied. So it is very difficult. My thing that I'm looking at, Liz, and you mentioned the VIX, is right now, and I'm looking live here, the VIX is 1690, just above 16. 16 is that number that represents basically a 1% daily move in the S&Ps, which we're pretty much seeing. So that is justified. I think the VIX should be higher. I really do. With all of the macro things going on, geopolitical events, headwinds coming up, Fed, interest rates. Oh yeah, next week, maybe the government shuts down, who knows? So I think it's still a really good opportunity for those that want to keep long positions in the marketplace to buy some protection. Maybe the VIX isn't as cheap as it was a month ago. It's still pretty cheap relative to what I see happening in the marketplace.
I'm just surprised that the S&P is now at 6604 when just the other day we were bumping up against 6,700. So for those of you who felt you missed a rally, I mean, it's a little bit cheaper now. Scott, great to see you. Thank you very much.